Good evening, ladies and gentlemen. Today is the 10th of November and a little bit of negative sentiment from global markets. Yesterday, US markets closed in the red, and then today, all futures in the red, little bit red. So we had a gap down. Idea is I like gap downs. Gap downs are my preferred days of trading because it generally leads to a good spike in IV. I was carrying one trade. First thing I did was close that trade in the morning, effectively booking around 70,000 profit on that, on the Nifty, and then I took my intraday trade, and the idea was very simple: small sizing, small target, small trailing stop loss. I held on to it till the point where it made sense, beyond which the risk reward for that trade would not have been good to hold on further. Very good chance that that trade would have given me more of a profit, but I really didn't like the proportionate risk that was associated. I've substantiated exactly what that is at that point. So as this phase goes on, I think it will be more and more of this. It'll be about taking small targets, small stop losses, not really trying to churn the market for returns when it's not exactly in my favor. It'll be in my favor if the actual implied volatility due to something shoots up on any given day, and on that, after that, continues to stay high for a while. That'll be a period to try and maximize. I think that would be only when India VIX is above 20, right? So at least 18, 20 is when I would be willing to try and get higher targets and all that. So anyway, substantiated a lot of that. Also took some result based trades. So what I'm doing is certain positional trades I'm allocating here and there, like little pieces of my margin, so that I'm diversified across different trades. And in case they do start going wrong, I'll be able to manage them in an all right fashion. So that's something I'm doing in this period. I think that would make more sense given the current nature of volatility. So slight exposure on the positional size, but completely hedged trades with good risk reward is what I'm going for. Anyway, I hope you had a good trading day. The time right now is about 1:30, and so far the market has been very stable. It just didn't suit me to continue staying in the trade, and I've gone over exactly why in the video. So thank you so much for watching. I'll catch you for the expiry tomorrow. I've also gone over what I think is potentially the expiry zone, and I will see you tomorrow. Bye-bye.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:55. We've had a little bit of a gap down on the back of weakness in global markets. So more or less everything across the globe right now, as far as futures are concerned, is in the red. And yeah, a couple of things happened yesterday as well. Huge sell-off in Tesla and stuff. So we've gapped down, and my idea is that this particular 17,700 put option and 18,150 put call option should require minimum amount of management. I'll go over why. So my call option sold into the weakness is still above yesterday's high. So unless there is some big short covering that takes place, then there should never really be any threat to this call option. On the downside, I'm expecting 17,800 to act as a strong support, and I feel like this particular area most likely will be respected, and that is why I've sold a put option which is 100 points below that. Now this is more or less how the trade looks. 17,700, 18,100, it was trading for about 33, 34. That is when I entered it. I'm expecting it to close under 20, so potentially a good 14, 15 points for the day is what I'm expecting to gain. Now I don't plan on over adjusting this. I will wait for 18,000 to be broken or 17,900 to be broken to take a decision on whether or not to adjust this. My idea is, the worst case, I would not want to give up more than 7-8 points on a day like today. So if that's happening, then I'll be taking the exit. One more thing, at the open, I exited the positional trade I was carrying on Nifty. It gave about 75,000 of profit, and it previously booked about 15,000. So I mean, there was quite a bit of a move in that period, and that was an alright outcome. I was never really bleeding on that position, and yeah, took the exit on that right in the morning so that I don't have multiple things to manage, and will just manage this particular position. So that's about that. Yesterday I had taken two positional trades on IRCTC and SRF. The IRCTC position is in a mild profit, so a little bit of cooling on the IV. IRCTC position is in a mild profit, and the SRF position is in a mild loss because SRF has actually moved 100 points since my entry, but the loss is very minor. Yeah, so because of the down move, I'll see towards close if I have to make any adjustments to this. The way I see it is SRF, I mean, downside can be there all the way till 2080. So see this particular range that it is coming back into, that top of that range should act as a support first of all. It's around here is a support zone, so around 2150. The lowest I'm expecting it to go is somewhere around here, which is around 2080. So I'll not be too quick to make any adjustments on the downside. I will wait through this in case we give a very weak closing. Then I'll see if I should take a little bit more credit by adding a bear call spread or something. But for now, no adjustment as such. And on a mark-to-market basis, actually, it's better than where I closed at yesterday by about 30-40,000. So all that's said and done. For now, the idea is until 17,900 on the downside or 18,000 on the upside are broken, I'll not be making any adjustments to this position. So it's just a matter of waiting, watching. Right now into the open itself, there is nothing to be concerned as such. I don't see any particular reasons of concern. As far as the OI data is concerned as well, there is a huge amount of call writing above 18,000. Now that can always work out to be a double-edged sword if towards the end there's some buying that leads to strength. So yeah, so this is what in the 17,900 straddle creation, mostly because people will have break-evens which are slightly higher. They want to increase that, but it shows that 17,900 itself should be a very strong support from the put side, right? And call side 18,000 and above has a tremendous amount of call writing. And from the overall PCR, it will be evident that there won't be that much threat for people to cover on the puts because there aren't that many puts written. There are far more calls. Right, so 72 million calls, 50 million puts. So all that's said and done, this trade continues to hold good for now, and I'll let you know how things go. Thanks. So as of now, from the open interest, the way it's been building since the morning, there are a couple of calls that have been written quite aggressively. So, but at the same time, there's some amount of put writing at till about 18,000, above 18,000, all put unwinding. Now, as of now, 17,900 is the maximum put side open interest. 18,000, 18,100. So between this range is where the maximum call side open interest is spread. If we do start taking 18,000, then I would kind of be afraid of some kind of a short covering move because of the kind of call writing that's in the system. So that being the case, my position is fine because the IV spike was due to the gap down, and since I'm short put options, the crush in the put IV will protect me for a while before the short covering really becomes a threat, and also because of where my calls are positioned. Now at this point, this is giving me slightly more than 4 points of profit. I cannot go by the overall mark to market because this is the positions that I exited. So my mark to market trailing and all that will have to be purely on this position alone. The rest of this means nothing. It's just there for to show that had I not exited, what would have happened and all that. One more thing to note while trading certain stocks which are not super liquid is that certain strikes, they will not have liquidity, and for the longest time it will be stuck at the same price because no other transaction will happen. Buyers and sellers will not agree at a price, and that can lead to like continued illiquidity on this. So that might give the wrong picture at times. Like this was trading at 75 even when the bid ask was somewhere around 85 and 90, a 5-point difference between the two. So that also something to note. And yeah, from the little bit spike in India VIX in the morning of about 3.5%, that is slowly starting to come down. It's a Wednesday, there will be continued swings in either direction. It's only natural. But for now, the position is doing all right. The time is 11:18. At this point, some strength coming from Reliance. We're testing the day's high. Now, I'm not too particularly concerned about this, but there's a very real threat of a breakout. Basically, the point at which this 18,150 call goes to about 18 rupees is where I will be squaring off the entire position. because my put options won't have any value left in them. So 18Y, I'll just show you here, right? So this particular from here can really break out in case there's a short covering. So 18 is a good point to take an exit. My put options are now trading at about 11 something, so they really can't, about 12, they can't give up too much value. So if I exit when these are about 18, I would have given up about, I would think, 2 points from here, right? So that's a 2-point exit. Currently this position is making a little more than 1,10,000 profit, and yeah, I'll call it a day early. I'm keeping very small trades, very tight risk management lately, because it's just not been the kind of market to trade my style with a large exposure. I'll give you an example. For example, this same position that I have, it takes about 3.8 crores of margin. If I just buy hedges, which won't be, yeah, so I will be able to bring down my margin to 1.36 crore, and I can basically take 2.5 times the size that I'm taking. In fact, if I structured in a certain way, I can go up to 3 times, but it's just not something I want to do. Lately, the market has been tricky. It's been all over the place, form all kinds of designs. The potential to gain also is not much, because there's really not that much premium in OTM options. So all that said and done, in such a situation, the best thing to do is just be like, play for smaller targets, have tighter risk management, have quicker exits, and yeah, that's the kind of period it is. So anyway, we'll keep you posted. The time is 11:20. My idea is, if this starts to go to 17.5, 18, I will book the entire position, and that will be the end of the day, unless there is some even further OTM spread that I can try to probably get another 2-3 points of decay. And so it's like terribly small, but that's the kind of period I'm in. So you have to go by what the market is giving you in a relatively low volatility period, where the nature of volatility is you have big moves in both ways very quickly with momentum. It's better to stay small. Like some people will say, no, I'll still regardless trade my own sizing and do that. That's their approach. Mine is a little different. Okay, so we'll be taking a trade on Tata Steel. Basically, here's what is happening. Tata Steel has results coming up tomorrow, and the current IV is high enough for it to be a good short. So currently at the money IV is 53, IVP is 94, above 95 is what I would prefer, and the trade I'll be taking is an iron fly around 1300. And so this is support in this zone here, should be resistance in this zone here, and given that that is combined with pretty decent pricing, it's a good trade to take in my book, and I'll be able to manage it. It offers very good risk reward as well, right? So risk reward is this, and to open up a little bit of the margin from the intraday. So what I'm doing is I'm shorting the 1300 call and put, creating a straddle there, buying hedges of 1200 and 1400. So yeah, looks good. We'll go over this one second. Okay, I've entered this position, and basically it's a results trade. I'm expecting there to be an IV crush into the results. In case this is a big move, then it's completely hedged. The risk reward is pretty decent. So I'll see tomorrow what to do in case there's a move. But as far as the price range is concerned, the IV is concerned, all in all, it's in a pretty decent spot. So don't have to be too concerned about there being a big move, because all these trades are fully hedged trades. Now I have 3 positional trades, one on IRCTC, one on SRF, and one on Tata Steel, where all 3 are the same. There are this attempted test also, the day is high, nothing much came of it, so the position is looking good. Okay, so another results trade, India Bulls Housing Finance results are coming out tomorrow. Basically what I'm going for at this point of time is, once again, a results trade wherein this IV, which is relatively high, can be shorted in this particular format. Max profit of 3 lakhs, max loss of 1.5. So IV is not really very high by India Bulls standards, which sometimes can have tremendously high IV, but it should be a good trade. If nothing else, between today and tomorrow, it would work out all right. So that is the trade I'll be taking. There's no rocket science here. You see that roughly for each position, I'm not allocating more than around 10 lakhs of capital. So what happens is, taken a view which IV is high, can short it. Results are coming up, so there will be an IV crash. In case it goes wrong, now depends. Do all my trades go wrong at once? Probably not. I'll have enough margin left over in the kitty wherein I can manage any position, and since these are all limited loss trades, even if you take max loss on all of them, it really will not have some kind of a big impact. So that's kind of how you want to diversify, spread yourself across different strategies, even if you're doing positional trades. So SRF, right, what has happened, not only has there been a down move, there has been a considerable increase in IV from the time I've entered as well. So even if it pulls back to my entry price, unless there's a corresponding IV crash, this position will continue to remain in loss. As of now, as long as it's above my break-even point, and this particular area on SRF of 2150 is a support, so I will not be doing anything to it. Even if IV continues to spike, that is okay. So, and moving on, there will be some illiquidity also in these options, so that's something to keep note of. But yeah, into the entry, given that I had to underbid and under ask, overbid and under ask, the position is in a mild loss. But you can see this is once again a results trade. If there's a good IV crush, I'll immediately be in a profit by tomorrow morning. So that we'll have to wait and see. Rest of the Nifty trade looking all right. Rest of the Nifty trade currently trading at about 25, just about 20, just below 25, so 24.5. It's giving me close to 1.5 lakhs of profit, and my idea will be trail by 3 points, so around 27. If this position goes to, I will be exiting it, else I'll trail to the end of the day. Wednesday should be a good day for me. Once again, we might head here, try to break out. We keep testing so many times, eventually we will break out. So, and as I say that, we are once again testing the day's high, and yeah, we'll keep you posted. Time is almost 12:30. We're almost midway to the day. The idea was shorting this at around 33, 34, expecting it to close under 20. It's already trading at 24. So yeah, the rest of the day should be okay. Either that or trailing stop loss hits. Regardless, should be alright. Okay, so now that we have taken out the day's high, the thing is, as far as open interest is concerned, the entire day there's quite a lot of shorting of this 18,000 call. Also 17,900, 17,950. People are making straddles here, so take the pricing in about 150 points of risk from here and here. The issue will be that there's actually a lot of call writing, and if 18,000 gets taken out, then it can lead to quite a drastic short calling, but I don't see how they would do it. There's no strength in the components, so there's no strength in the components. It'll be difficult for Reliance to do it alone. Bank Nifty not participating. It's not like IT is strong, and yeah, so I would be more inclined towards 18,000 actually getting defended rather than a short covering, which is why I'm still holding the trade, and the trade of course well within my stop loss criteria. If we take out 18,000, certainly my stop loss will hit, so just sticking to that. And yeah, will be interesting to see where we close for the day. But given that there is no real reason, there's nothing that will trigger that sudden up move unless Reliance goes all the way to 2600, and then that will be a trigger. But as of now, can't see it. But just at the halfway mark, and yeah, I mean that 10 points is almost done. The 10 points that I was going for. Okay, I'm going to be calling it a day here. I'll come back to exactly why. I'll go over exactly why in a second. The reason I'm exiting was we've had very sideways first half, little more than first half, and this position has come to we go over that exactly. This position had come to just about 20 rupees. Now I know for a fact that if we close exactly how we've been holding the entire day, this will close around 15-16 rupees. It will lose another around say 4 or 5 points. But given that we are in this constant higher high, higher low pattern from here, if we make just a 40-point move above 18,000, these calls will explode. They will go to 17, 18, 19 very quickly, whereas these puts have nothing to lose. And given the nature of market we are in, I have no intention of moving my puts higher, taking more credit, and then saying that okay, we break the day's low after having an entire day making higher high, higher low, break the day's low. Very possible. That's kind of the market we've been in. It's also a Wednesday. So my idea is I've made a good I was going for 10 points, good 12 points. So between this particular position, I booked about 1.8 like that. So it's good enough, and I'll take that. And I don't want any further dealing with this, because the threat of explosion is huge, because it's not, and there's a very good chance that it gets defended, and actually we stay right there, and the call option, which is trading at 13 right now, goes to under 10 rupees, and finally both of them close under 10 rupees. That's what I'm also expecting. But my risk reward from here is not great. What, again, best case another 5 to 6 points, but I might very quickly, just in one 40-point move, lose those 5 to 6 points. So it's a good place to call it, and that's what I've done. And yeah, that's about it. That's the end of the day, and we'll see tomorrow expiry how things are looking. As of now, as things stand, very real that we expire probably most certainly within this range itself, 18,100, 17,800. This particular range is what I would think highest likelihood of expiry. Anyway, done for the day. Among all the Nifty positions, I would have booked 2.71 lakhs. 70,000 was from what I'm carrying, and yeah, close to 2 lakhs intraday. So that's about it. Thank you so much for watching. I'm carrying all of these positional trades. I will let you know how, if and at all, I make any changes. If I make any changes by the end of the day, which is highly, highly unlikely, I'll post about it on Twitter. Thank you so much for watching. Have a great day. Bye-bye. Okay, this is precisely why I exited. Because as soon as we get to that 18,000 mark, immediately, everyone who's short call options is going to start covering. So I would much rather cover here than here, right? Because immediately, let's take a look at what happened to the put option that I would have been holding. I mean, the other option would have been to move up the put, but I didn't want to do that. Put option has not lost any value. Call option has gained 4 points almost at one point from where so I don't want to deal with this sudden spike. Yes, towards the end, both of them might end at under 10 rupees, but I don't want to deal with this. So that's why just before everyone else exits, I just took my exit. And yeah, thank you for watching. I'll catch you tomorrow.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.